Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, continuing our discussion on opening range and our initial balance, because that's what will give us our thesis, identifying or tracking markets and looking for best trade candidates. We talk about a Monday sets our initial high-low, make that a red, high-low for the week when the week starts. Now on a Tuesday, we could extend that range, or it could be inside. It may be a market that trades up and down but stays as an inside day. Perhaps the market goes even lower on day 2. Before pulling back inside, it could end up as a first green day. It could trade higher on day 2, our Tuesday, and that gives us our initial balance, and it could close as a first red day. But what we head into our Wednesday, we can have a thesis for a day 3 parabolic. So again, coming back to understanding peak formation high, peak formation low, we could have a market in consolidation that builds for a vertical move on day 3, or a market that has come down and builds for a parabolic move again on day 3. It may be back up into the high for a collapse on day 3, a parabolic move on day 3. Sometimes we may just have a high of the week, low of the week opportunity. But ideally on the day 3, we're getting a parabolic explosive move. An excellent question from a trader was, how often do you see these? Well, I look for them every Wednesday and every Friday, which is why I call them free cash Wednesdays, free cash Fridays. The challenge is obviously hunting out the best instruments, tracking different markets, and be able to identify where the easy trades are. Now, if we do get a market that breaks out, we can now be on a range expansion, which is a measured move of a market, at least one full expansion of the range that it's just broken out of. Now, what helps to identify some of these range expansion opportunities are where the other time frame stops are, monthly highs, weekly highs. We could be inside of a current existing move in a monthly cycle that's gone sideways before breaking out for a measured move coming out of week 1, week 2, maybe week 3. We could be in a market that merely does 3 days of rise, day 1, day 2, day 3, for a dump on day 4. And it might even be an inside bar, false break, and a dump on day 5. Sometimes we are in a market that may just keep going and there isn't a best trade setup. It just keeps moving higher and higher, or lower and lower. We can get a market that breaks out higher, pulls back, goes higher, breaks down and goes sideways. And remember, we talk about a market that when it goes sideways and it coils sideways, can explode out for a measured move. We don't take out a weekly high or low. It coils sideways. And that can coincide with major red news. It can coincide with a day 5 blow-off. Again, Wednesday, Thursday, Friday. Wednesday becomes our new day 1 in our Monday to Friday 3-day templates. Monday to Wednesday, Wednesday to Friday. We can get a market that breaks out and moves higher, and we get day 3 breakouts. And we may have a market that looks poised for a reversal, but it actually continues to go higher. So remember, the most important thing we need to always have if we're going to take an instrument for a 90-10 opportunity is an actual setup. It just can't be up high trying to sell, and getting stopped because it continues to go higher. Same thing goes on the downside. We don't try to buy something that's working lower just because it's working lower, because eventually this could blow off and that will blow your trading account out. 90-10 is when a market has given us that opportunity where it's already broken down, Could be in the US session. It might be 3 sessions of rise. It's taken out the high of the day, maybe the high of the week, for a capitulation, a blow-off move. Geometrical structures. Talk about studying Peter Brandt, classical charting, Schabacker, Edwards, and McGee to understand geometrical structures and range expansions. That's targeting asymmetrical risk-reward, selling high, buying low, if there is a setup. Now, if there's no setup and you're trying to short something because it's up high and you're in the middle of a break that's continuing now for a range expansion, again, that is something that can blow your trading account out. So I really want to emphasize the importance of understanding the opening range, because that is what helps us develop a thesis for an instrument as the week progresses, because you don't need to trade every day. The zigs, the zags, the highs, the lows, the gaps, the hunts, this, then that. When in reality, like, we have had several parabolic opportunities this week for capitulation moves that take out 2 or 3 days of trading in maybe 1 or 2 hours or less, because that's how it works. They pump it up to dump it, or they dump it down day 1, day 2, day 3 for a big move back up. And that can happen quite frequently on gold. Other currency pairs may continue to trend. There are other fundamental factors at play, especially as we get towards the end of a new month. So we're getting to that point now where we're coming towards the last few days of a month, and we've made videos about this before. You can go onto the channel and Google that, because the beginnings of ends of months are when we will see changes in direction, false breaks, reversals, continuation trades, again incorporating other time frame traders. Just for example, we'll take a look at the Japanese yen. On day 3, on our Wednesday, we had a parabolic long trade at the beginning of our U.S. session. Asia, London, New York, a 3-session setup on day 3. There was no major red news on the calendar. We were inside the previous day's high and low, but let's back this up. If we're targeting day 3 parabolics, Wednesday, Friday, free cash Wednesday, free cash Friday, we talked about letting the market set up. So again, if traders haven't been consistent, we want to focus on the opening range and initial balance. So we have our opening range on our Monday high low. We have our opening range, peak formation high, peak formation low on the day. The market moves higher, triggers breakouts. Now, several traders have asked, yeah, but it was a false break, and I thought we were going down back towards the low of Monday because we had breakout traders trapped in the market. When this market comes back up a second time and a third time, we now have an initial balance. So we have a peak formation high and a peak formation low on the day itself. Peak formation high, peak formation low. Remember, the initial balance and the opening range form our high-low for the week in a high percentage of circumstances. One of those extremes will tend to hold. So peak formation high, peak formation low. After day 2, we have a higher peak formation low that the market consolidates inside of. Peak formation high, peak formation low, consolidation. Now, this is a 1-hour chart. Now, we had a confirmation for a parabolic entry in the U.S. session, 3 days, 3 sessions. But let's just take another look at that. We have our entry criteria met 25 minutes into our U.S. session for the entry into our 3-day parabolic opportunity. Now, let's just back this up. This is a 5-minute chart. This is a 15-minute chart. And this is our 1-hour chart. So coming back to understanding where the opportunities lie. Once we have our entry confirmed on our 5-minute entry at 8:25 a.m. in our New York session, backing this up, you can see the larger time frames are driving this move. I keep repeating the phrase that other time frame traders are driving this market. Now, the problem with traders looking at a moving average is that they'll get caught chasing these trades without a larger setup confirming this for a potential geometrical range expansion, and they will get caught chasing a move into the higher the low. So coming back to the larger thesis, understanding the opening range and the initial balance for a day 3 parabolic opportunity. Now, when we put our geometrical range expansion tool on there, we've already hit 100% expansion of the range. Traders, again, we're looking to try and short this when we're still on the front side of a market. This is an hourly chart. We're approaching 2 full expansions of the range, and this market it could still continue to rise. Again, understanding the importance of front side and back side. We are currently on the breakout of a daily chart level. We still have a micro momentum trend line. We could very well have a reversal day. We have breakout traders in the market. No idea. But when we had our 3-day parabolic opportunity, this coincided with other time frame trading driving the markets. Daily, 4-hour, 1 hour. Again, understanding the thesis behind taking the 3-day parabolic opportunity when it presents. Canadian dollar opened as a inside week on our day 1. We had a market that was trading inside of the previous week's high and low. We'll mark these levels off. Again, understanding the importance of the opening range, developing a thesis, whether it's for a day 2 trade, a day 3 parabolic, maybe a day 4 continuation trade. So we're looking at a market that opens inside of the previous week's high and low in a narrowing, consolidating range. Remember, when a market goes into a narrow range consolidation, it can be coiling for a large move. A parabolic move on day 3. Now let's back this up. This is our 1-hour chart. Again, we're inside of an inside week. We have a day 3 parabolic move coming outside of our initial balance and our opening range. If we put our range expansion tool on here, we'll just lower this down. We have a market now that has gone 1 full expansion and is approaching a 2nd full expansion of the range. Again, understanding when not to try and counter trend a market that is still on the front side of this move. Backing this up even further, we have a market that is now broken out of that consolidation, and we are approaching monthly highs. Near the end of a month, we have a breakout in our last week of the month, and we may potentially be going to the high of the month. Will we get a reversal? No idea. This could continue. We have an explosive coil consolidation that this market has broken out of. We are in a range expansion currently, and not an indication yet intraday or end of day that there is a first red day or a reversal day in play. So again, another reason to not just be looking to sell a high or buy a low if you are in a market that is making a range expansion. Which brings us to gold, and we'll just have a look at gold. We have a market that put our opening range into place. Opening range is our Monday high low. It was an inside day, lower highs, lower lows, that turned into a first red day, a day that closes below the open. We had not taken out any daily levels between Monday, Friday. The last daily level that was broken was Wednesday's low of the day. Wednesday's low of the day was the last time that other time frame traders were triggered into the markets. We had a first red day, a big short squeeze on the Friday, a first red day on the Monday that rolled over and went parabolic in our Asia session. Again, underneath of that breakout level, no high of day breakout trades triggered an inside day on the Monday, and that market completed a measured move down into longs from our short squeeze heading into the Fed Chairman Conference on Friday morning before going down and consolidating for 6 hours into the low of the London session. So again, we had a vertical explosive move come back in the US. And if we bring this down, we now have our opening range and initial balance heading into our day 3 on Wednesday. There's our high of the week. There's our low of the week. On day 3, we'll just zoom in. We had a market that had consolidation. It broke out, triggered breakout traders into the market before reversing and taking out the low of the day. trigger breakouts first, then come back and hit their stops. So think about this. If traders were going long with any sort of size, they've put 75 pips of heat into those traders. That would margin most people out who have a reasonably decent size on their trades. We have Asia session high is right here. That's the high of the day. They go a little bit higher prior to the US session open, hitting breakouts, hitting stops, triggering breakout traders before reversing. Remember, how many times have we said this? Lower low, day 3, 3 levels of rise, first hour takes out the high of the week and engulfs at the end of the hour. 1, 2, 3. The high of the day has been broken out of and fails. This is a 1-hour chart. Sorry, a 15-minute chart. Again, that breakout closes back inside of the high of our day. Just move this across. We have double zeros. We've gone 50 pips outside of the double zero box, cleared out the high of the week, and engulfed the upper structure for a vertical parabolic measured move all the way down into Tuesday's US session longs. Now this is our 5-minute chart. We're going to just explain a couple of things about this market. This is before the news, before the major red news, unemployment release numbers. Remember, this is before the news. So let's go back and look at this chart. We'll put a 15-minute chart up on here. Go back and we talk about marking our consolidation off into the close of a day. We have a red day, first red day, day 3, a vertical move down, but we'll back this up even further. We'll go to the 1 hour and we will mark off the low of the previous week. That is the low of the previous week. This is the low of the current week. There's our opening range and our initial balance. Day 1, day 2, day 3 collapses, first red day, pump up day, peak formation, failed breakout high of week. And we're going to look at oil because this is the same chart yesterday as Friday's day 3 high of week. Oil reversal, exact same template. But I want to just really enforce the idea of understanding other time frame traders and who are driving these markets and having a thesis heading into our news. Our low of the day is above Tuesday's low. We have a market that has put a low of the day in the Europe session. We have a 100 pip consolidation. We have a market that has broken higher and gone up to the high of the day and then consolidated between 25 and double zeros. 3 levels of rise, trap volume up high before major red news. Now let's zoom in again and look at this chart. We have a market that gives us an entry before major red news. The market has already gone short, pulled back, and a narrow range bar inside of our EMA for a short trade before major red news. The market then pulls back and coils, and on major red news, we have a continuation trade entry, continuation trend trade entry in line with the existing trend. We're going to go back and look at this. So we have a potential measured move opportunity. This is a 100 pip rectangle, body to body, gives us a potential target down a full range. We've gone through one full range expansion, a second full range expansion. This is a trend trade. This is the 5-minute chart. So you'll notice after the first 5 minutes, we are already outside of the range. So again, traders need to understand on a high momentum trade opportunity, they wait 5 minutes and they're waiting for the first bounce, but it's a trend trade. A first bounce would be if the market went bang, straight down in 1 minute. Then we want to see it pull back for the continuation, because it could also go bang this way and break out and be headed back towards US session shorts from the night before. We don't know. We don't know what the news is going to do, but the underlying weight behind this is that if this market breaks, The first place it's going to target is the low of the day, which is a 50 pip minimum opportunity. Now, if they're going to stop at the low of the day, in most cases, they're not just going to go to the low of the day. They're going to go 25 to 50 pips into traders who are low off the low of the day. Low hanging fruit in line with an existing broken down market that is being driven by other time frame traders. There's our news opportunity see, remember what the news is all about. What we don't want to do is get in before news, because they could throw a wick, explode, do anything. They can go in any direction. We don't know. But after the news is released, we go back to our original thesis. Original thesis is that we already had an opportunity to short this on the 5-minute, but we had to wait for major red news. There was the original opportunity. Coming back in line with our trap volume up high, 3 levels of rise, we're targeting low-hanging fruit at the low of the day. If there was no news on the calendar, the market would have already given traders an opportunity to be short into this market. This is the 5-minute chart. This is the 1-hour chart. This is the 4-hour chart. And this is the daily chart. So again, coming back to preparation, understanding where the opportunities are. Where are we in the timing cycle? False break high of month. The most likely target is going to be the low of the month. Now we're heading in towards the end of a month right now. We've already taken out, we'll put a blank chart on here, we've already taken out the low April. So when traders are I suppose missing trades, as I mentioned before, news isn't for everybody. You don't have to trade the news. But there are opportunities at the New York Open today. Again, the underlying weight is being driven by other time frame traders, front side, back side. When you have a thesis and you have an understanding of the opening range and the initial balance, it gives you the understanding and the conviction to not be guessing and where you can position yourself in the market after major red news or into the New York Open. A first bounce for 5-minute traders on the New York Open gave them 50 pips in 15-20 minutes. The market came back before it continued to auction down. Traders on the 1-minute chart, the smaller time frame at the New York Open, the high was already locked in at the end of that 30-minute cycle before breaking down double zeros for a 50 pip collapse back into traders who went long at the beginning of that hour at 9 a.m. New York. So again, the market was going to go to one of two places, either into the first bounce trader. New York Open could have went bang this way, except they locked in the high and they went back bang this way to get traders who counter-trended that move after the first hour, put in a low right at the end in the last 15 minutes before reversing and coming back up into traders' short positions, shaking out some weak shorts and rolling over into the New York Open, eventually petering out and breaking down further later in the session. But coming back to understanding, having a thesis, don't know where the news is going to go. We already had a possible opportunity to be short, but we had to wait for the news. News is released. No wicks, no explosions. We get back to work. It's a 1-bar trade. It's a momentum opportunity. It should go vertical fast. If it comes back, we're wrong. We're out with a 1-bar stop. But if it starts to accelerate, we have up to maybe 5 minutes, 3, 4, 5 minutes before this trade blows off and does a measured move. So again, being prepared, but understanding the initial balance, the opening range, the highs and lows of the week, the highs and lows of the day, and understanding when there's an opportunity for trading major red news if you are. And again, standing aside if you're not trading news or you don't want to trade gold, New York Open. Okay, the focus for me tomorrow will be obviously looking for Free Cash Friday and parabolic opportunities after 3 sessions and 3 days from Wednesday, Thursday, Friday. Focus on the best opportunities. We have major red news at 8:30. Stand aside. Let the news trade. Don't focus on the news if you're not a news trader. Focus on New York Open, second hour opportunities, maybe third hour reversals, whatever that may be. Could be third hour continuation opportunities. Just in closing, we can look at West Texas. Monday, our opening range. Tuesday, our initial balance breaks out. We get day one longs in the market. Day one, day two, day three, Monday, Tuesday, Wednesday. Day two longs in the market. Breakout traders, we've also taken out the high of a week. And we'll just project that across. Day one, day two, day three. The market goes backside Asia. London breaks down. And we get our pump and dump in the New York session. Pump and dump, Monday, Tuesday, Wednesday, a reversal inside on Thursday before the New York session. We break out of the previous week's high. You'll notice a bit of a head and shoulders pattern at the high of the week, but New York opens underneath of the high of the week. First hour pumps up into a broken down market. Second hour opens and goes parabolic in line with our existing EMA reversal on the backside of a move. 1 hour, 2 hour, 3 hours, and the fourth hour continues down to the low of where the move began. Go back on our Monday. Breakout longs in the market on Monday at the quarter level. They go right back and get the market's escalator, market sewer long. Escalator up. Day one, day two, day three. Elevator down. Focus on the best opportunities, traders. Watching somebody, shut all your chat rooms off, all that other stuff. If you have 4 days to prepare for one great opportunity. Not worried about catching every little move. We're looking for the best scalable opportunities of where we have a 90-10 probability. Keep it simple, traders. Focus on the best trade setups. No excuses. Be prepared. Understand what you're looking for. If you're not sure, don't trade. If you're not sure, you shouldn't be trading. You should be observing and waiting and watching. Focus on Wednesdays and Fridays. Free cash Wednesday, free cash Friday. Parabolic trade opportunities. 3 days of rise, 1 day of drop. Wipes out 3 days. Think about that. Have a great day, and may the markets go with you.